Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing 3 articles, to where the first one is titled, Is Palantir Technologies stock a buy now? After that, we'll talk about another article titled, Why Palantir Technologies PLTR should grace your portfolio, and then lastly, we will be talking about, is it too late to buy Palantir Technologies stock? So if you are already a holder of Palantir's PLTR stock, or if you want to buy more, or if you haven't bought any yet, then this is the video for you. So for more videos on Palantir Technologies, remember to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and with that being said, let's jump right into today's stories. Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government clients, and this company also specializes in artificial intelligence, and if you didn't know, artificial intelligence has been a significant focus of Wall Street throughout the year. A lot of investors are focusing on artificial intelligence and machine learning companies to invest into because it has truly been the talk of the town, and Palantir Technologies is one of the top stocks in those segments, which is why the stock has popped more than 100% over the past 12 months. However, the buying window could still be opened, or potentially some investors believe it has closed, so we're going to be comparing and contrasting the benefits of buying now or selling now or not buying right now, because the share price is rather high at around $16.77, and recently it has dropped by around 3%, even though investors believe it could surge up to $25 over the next 12 months, so let's see who's right. Let's first start off talking about their solutions. Data has become one of the world's most important resources, more valuable than gold and oil, and using data effectively can give various companies or government agencies a competitive edge against their competitors or any threats, and Palantir builds custom software solutions for customers on its 4 platforms, which would be its Gotham platform, their Foundry platform, Apollo, and AIP, with AIP drawing in the most attention right now because that is their artificial intelligence platform. And this will help organizations analyze data to make smarter real-time decisions so that a company's management can use this data to make good decisions which will benefit the company over the long term. Now, what's interesting is that although the world continues to face geopolitical challenges and the market has also been very volatile, because Palantir is focusing on artificial intelligence, it is leading the overall stock market. Meanwhile, commercial businesses are steadily expanding into more artificial intelligence-led softwares, and they are trying to outpace their competition by getting an edge up using their data. All in all, analysts are very optimistic about Palantir's long-term growth trajectory, but not their short-term growth. Estimates currently come in that the company will achieve $2.2 billion worth of revenue this year, and it's believed that Palantir's sales will surge up to over $3 billion by 2025, meaning that there is a lot of upward momentum for this company. In the meantime, Palantir's financials are very strong. For instance, you can see their free cash flow and net income have dramatically risen over the past 4 quarters, and Palantir's earnings per share have been positive over the last 3 quarters, with the next quarter being their 4th quarter, also anticipating to bring in a positive earnings per share, which will allow them to become eligible for inclusion in the S&P 500, which means that a lot of money will flood into Palantir shares, meaning that the share price will go up due to this increase in demand. So moving forward, their EPS, also known as their earnings per share, should rise quickly as their revenues continue to scale. Overall, this is very fundamentally solid, and it's great news for Palantir. We also know that Palantir is flush full of cash. They have $3.1 billion worth of cash and or short-term investments or liquidity on their balance sheet with virtually no debt. They also issued a $1 billion share repurchase buyback program over the last quarter, and by reducing outstanding shares, this should further support their higher earnings per share, which again will reflect very positively on their overall share price. However, there is bad news because the stock trades at a forward price to earnings ratio of 78, which is way too high. Ideally, we would want this below 50, and the lower the better, because the S&P 500 has a PE ratio of just 19. And many investors believe this high forward PE ratio is unreasonable. However, when we look at this valuation and we discount it compared to their overall growth rate, that drops down to a PEG ratio or PEG ratio of 1.2. And if you don't know a lot about a PEG ratio, typically a PEG ratio under 1 is typically considered cheap. So although Palantir Technologies is not necessarily necessarily considered cheap. If you plan to hold this company for the long term and you allow their overall growth rate to take hold of their earnings per share, then eventually this company will grow into their current valuation. It just may take 3 to 5 years. So over the long term, earnings growth should lift their overall share price over time, and that's why investors should take a closer look into Palantir Technologies. But we have even better news than this, because some institutions have changed their mind in a positive direction regarding Palantir. For instance, Zacks recently issued a buy rating on Palantir's PLTR stock by giving it a ranking of 2. And if you don't know how the ranking system works, you know that 1 is a strong buying opportunity, the rank of 2 is a buying opportunity, a rank of 3 is a hold, 4 would be a selling opportunity, and 5 would be a strong selling opportunity. So not only do they have the rank of 2, which is buy, they also have a high VGM score of B. And the research shows that those who are ranked 1 or 2 and have a B rating end up being some of the best investment opportunities right now. So the company appears to be a compelling investment opportunity even at their current share price. Now, that is not to say that the share price can't drop to potentially $15 or even $12 over the next 12 months, because investor psychology can be unreasonable at times. But what we really want to pay attention to is their long-term growth trajectory, and we want to get this company as cheap as possible. And since they specialize in artificial intelligence and machine learning, I think the future of this company looks very bright. For instance, when we look at analysts at Goldman Sachs, they estimate that the artificial intelligence market could reach $7 trillion by the end of the decade. While on the other hand, you have Morgan Stanley, who also sees a very high opportunity in artificial intelligence, while they believe the artificial intelligence total addressable market could be $6 trillion. But even when we look at more conservative estimates from a TD Cowen analyst, that generative AI software could reach $81 billion by 2027, it leads to a giant pull and opportunity for Palantir to further tap into. Although yes, right now they are overpriced considering their current ratios, we know that their future accounting ratios will be discounted according to their future growth rates, meaning that if you plan to hold this company for the next 3 to 5 years, regardless about what it does in the short term, you will eventually make profits on this company. So there's a significant amount of growth already priced into this company, which is why the share price is so high. But if anyone's looking for a quick profit, then this company probably isn't for you. Now, on the other hand, if you are a long-term investor, then this company definitely could be for you, because their long-term growth outlook is absolutely phenomenal. So the opportunity here is almost unmatched compared to other AI companies, and since Palantir's expertise, their growth could persist over the next few years. Furthermore, Wall Street forecasts that Palantir will deliver double-digit percentage revenue growth over the next few years, and that their earnings per share is expected to grow fourfold between now and 2024. So we could expect this company to balloon in their overall earnings and revenue, which is exactly what we as investors want. So honestly, this could just be the very beginning of years of profits and growth for Palantir Technologies, which will reflect positively in your personal portfolio. But again, you do run the risk, because if you are a short-term investor and you're looking for quick profits, then this company is not for you. But if you are a long-term investor and you're willing to hold this company for the next 3 years to really get a hold of that phenomenal growth rate in regards to the revenue and earnings per share and their share price after that point, then this company is meant for you. But always make sure to do your own research and don't overexpose yourself too much to any singular risky growth company. I normally draw the line at around 5%, but I would love to hear your thoughts down below. Don't forget to become a member of this channel as well for as little as 99 cents to support me personally, because that's what keeps me here on YouTube. And with that being said, I will see you in the next YT video.